Hi all, this is Sachin. Today I came with one more learning video. Today I am sharing very important concept of the trading and investing. You may be a trader, you may be an investor, whoever. You have to understand this concept very well before entering into this field. These all are probability and risk to reward. What is probability and what is risk to reward? You heard it and you may learned it in your schooling also. What is probability and what is risk to reward? What is ratios and all, and how it will be applicable in stock market. That is we wanna learn today with examples. Then you will be understanding it. One is probability, one is another one is risk to reward. That is RR. That's I am explaining you today. The first one I will explain, that is probability. Probability is what? Probability is something whenever you have uncertain events, that means you don't know what will happen in future. If you have that kind of uncertain events, that in this situation we will use probability. That means, for example, if you're tossing one coin, and there may be two chance. When you toss it, you may get head as a result, or you may get tail as a result. There is two chance. You don't know what will happen, but there is a two chance. This means there is a 50% of chance you may get head, and another 50% of chance you may get tail. That means whenever you're tossing the coin, you are not aware what you will get. So you just think that I may get head or I may get tail. That's why we are dividing probability. Probability of getting head is 50% and probability getting tail is 50%. In the same way, if we apply the same concept in our stock market, when you are entering any trade in a market, or when you are going to invest in any asset in a market, if you are entering the market, if you are entering here, there is a 50% of chance it may go up, and there is a 50% of chance it may go down also, right? That means there is a 50% of chance for win, and there is a 50% of chance for loss, because we are not sure. However, whatever the strategy we have, but we are not sure that it will go up only, or we are not sure it will go come down only. So if we have 50% of chance to up and 50% of chance to come down, means why we will only think about earning money here? We should also think about losing also, right? There is a probability of losing the money also. So in this scenario, we have to manage our risk. Here our risk to reward will come to tackle this probability, to tackle this probability and to win on this situation. Our risk to reward will come here. I will explain what is the risk to reward. For example, risk to reward is risk to reward. This is the ratio. For example, your risk is, this is risk, then this is reward. Your risk is 1 rupees and your reward is 2 rupees. That means if you are doing any business where your expense is 1 rupees and your profit is 2 rupees, that means your business is profitable here, because you are ready to lose 1 rupees to earn 2 rupees in this business. For this business is profitable for you. You don't know you will get 2 rupees as a profit, but if you get 1 rupees loss, you will out from that business. That is your thinking. So there is a probability of getting win in this business, or there is a probability of getting lose in this business also. So what I know, if my business go wrong, till 1 rupees loss, I will stay in this business. If this loss go above 1 rupees, I will just exit out of this business. That's why I'm choosing 1 rupee as a risk here and 2 rupees as a profit here. That kind of strategy I will build here. It's up to you how you build that. So somebody will be building 1:2, and somebody is building 1:3, 1:4. It depends on them. Now I will combine this risk to reward, and this probability both, and we'll understand with the market when we combine this risk to reward and probability, and how it works in a long term trading career or investment career. Okay, I will give you the example. You built on strategy, you built on strategies. Okay, you built on strategy. That's you back tested it. This strategy, when you take 10 trade out of this strategy, 10 trade, in this 10 trade, as per your analysis, as per your back testing, you are getting profit 5 times out of this trade, out of this strategy. Five trades you are profitable, and again in 5 trade you are getting loss. That means 10 out of 5, if you divide it, that is means 50% of the accuracy you have in this strategy, right? So you have 50% of accuracy in this strategy. So when you start applying this here, for example, you take first trade here and your risk to reward is 1 is to, in first trade your risk to reward is 1 is to 2. That means you are, if you lose this trade you will lose 1 rupees, but if you win this trade you will win 2 rupees here. So for in the same way, if you take 5 trades, in 5 trades you own 2 rupees, that means you own 10 rupees profit. Out of 10, if you take 5 trades, in that 5 trades you own 2 rupees, that is 10 rupees is your profit here. Profit. See, same way in out of 10 trades, if you lose in 5 trade, because your accuracy is 50%, right? If you know if you take 10 trades, definitely 5 trades you will lose here and 5 trades you will win here. Okay, in this you are losing 1 rupees here, that means 5 rupees you are losing here. Your loss is 5 rupees here. This is your loss. What is happening here? Just understand. If you have any strategy in a stock market, you should not have to win 100% times here. You will not also. It's not possible. Nobody, no billionaire, millionaire trader also, they don't have any strategy which they are winning 100% time. So everybody has a strategy which they are giving 60, 70, 80%, maximum 80%, 70% of the win ratio that strategy is giving to them. See here our strategy is just giving win rate 50% time, 5 times only it's giving win rate. When we combine risk to rewards 1 is to 2 with this strategy, if you win 5 times, I mean with that, you know, if I take 100 trades, in 100 trades, if I win only 50 trades also, I am profitable here. See, 5 rupees is my loss, 10 rupees is my profit, because I am still profitable here, right? You are understanding what I am telling. That's why risk to reward and probability is very important in the market. Stock market is very knowledge required game. You have to understand everything here, but it should be very simple. How decision points are less, that much quickly you can take the trades and you can win the trade here. Thank you so much. I hope you got it.